Hi candidate, welcome to another session of manifested online classes. So we are still soldiering on with the syllabus coverage, and in this session I want us to look on IPSAS 9 which governs or basically which establishes now the principles for recognizing revenue by the public sector entities which are involved in what you refer as the exchange transactions. So when talk about exchange transactions, these are those particular transactions undertaken by public sector entities, whereby a public sector entity will receive some consideration or basically some price, and the public sector entity is expected to give some services to transfer some goods equivalent to the consideration which has been received. And therefore, what IPSAS number 9 does is that it establishes now the principles for recognizing revenue from such transactions, that is exchange transactions, by what we refer as the public sector entity. So therefore, we can say here as our introduction that IPSAS 9 establishes the principles for recognizing revenue from exchange transactions. So any revenue which is received from exchange transactions, how is it supposed to be recognized, or how is it supposed to be accounted for by the public sector entity? Establishes the principles for recognizing revenue from exchange transactions by the public sector entities, the public sector entities, and we can say that the exchange transactions include number one, what we refer as the provision of services, a provision of services, whereby a public sector entity is providing services and is getting some consideration in return. That is a good example of an exchange transaction. Number two is what we refer as the sales of goods. The sales of goods. A public sector entity is selling some goods now to the members of the public and receiving some consideration equivalent to the value of the goods which have been transferred or sold. And also we have what we refer as use of assets by others. So when talk about this particular transaction here, use of asset by others, this whereby a public sector entity owns some assets and it leases out those particular assets to other parties who are expected to use those particular assets for a given period of time and pay some consideration to the public sector entity. So therefore, in terms of how this particular, or in terms of how the revenue from all these particular transactions should be recognized by the public sector entity, then that is governed by this particular standard here, that is IPSAS IPSAS 9. Then from there we can also look on the scope of this particular standard, the scope of IPSAS 9. And generally what you have said is that IPSAS 9 here, this applies to all the public sector entities which are undertaking or which are involved in the exchange transaction. If a public sector entity is providing services to the members of the public and receiving some consideration on the same, is selling some goods to the members of the public, receiving some money or leasing out some asset, so how should it recognize now the revenue from all these particular transactions? So those particular public sector entities which are undertaking or involved in exchange transactions, then they should recognize revenue from such transactions in accordance with these particular standards here. And therefore we can say that it applies to all public sector entities. It applies to all the public sector entities that engage in exchange transactions, including provision of services, commerce, sales of goods, and use of asset by others. Use of asset by what? By others. Use of asset by what? By others. So then from there we can look on some few definitions. We can look on definition of a few terms. So here we have two terms we need to define. Number one, we need to define what is an exchange transaction. That is something we have already mentioned here about an exchange transaction. And also the other term we can define, which is also a key term, is the revenue. So let's start by defining the first term, which is revenue. And basically we say that revenue is what? This is the inflow of resources. Or basically inflow of cash arising from these particular transactions here, like provision of services, like sales of goods, or basically as a result of leasing out some assets. So therefore we can say that this is the inflow of resources, arising from exchange transactions. So if a public sector entity is selling some goods now to the members of the public, it is providing services to the members of the public, it is leasing some of its assets, definitely there is some inflow of what? Resources. There is some cash which is received from such transactions. Then the other term which we need to define is what we refer as the exchange transaction. What is an exchange transaction? An exchange transaction, in very simple terms, is basically a transaction whereby a public sector entity will do what? Will give some resources to another entity, and the other entity, or basically the other party, give some resources which are equal to or equal in value in exchange. So therefore we can say that this is a transaction in which a party give resources to another party, and the receiving party gives resources equal in value in exchange. Equal in value in what? In exchange. So for example, what we know is that if, for example, a public sector entity is selling some goods. So let's assume we have a public sector entity here, which is involved in selling some goods, maybe to the members of the public. So once this particular public sector entity sells those particular goods, then it will receive a price which is equal to the value of those particular goods which have been sold. Now, this is a good example of an exchange transaction, because we are saying is a transaction whereby one party, for example, the public sector entity, will give some resources to another party, either a member of the public, and the member of the public or the receiving party will give a resource, which, for example, can be a price equal in what? In value, in exchange of the resource now which was given by the public sector entity. So therefore, these are some of the terms you must be in a position to do what? To define. You must be in a position to define. Then from there we can proceed and look on the recognition criteria for revenue, or we can just talk of revenue recognition criteria. So basically, when we talk about revenue recognition criteria, we're talking of the conditions which must be satisfied for revenue from exchange transactions to be recognized. In this case, we can say revenue from exchange transactions should be recognized if these two conditions have been met, or if these two criteria are met. Number one, it is probable that future economic benefits will flow into the entity. For example, a public sector entity has provided certain services, or basically it has sold some goods, and therefore the public sector entity is expecting some money from the services provided, or maybe from the goods now which have been sold. So mean that it is probable some future economic benefit will flow into the entity. Number two, or the other criteria for recognizing revenue is that revenue can be measured reliably. So if those two criteria are met, then we are saying that revenue from exchange transaction must be recognized. And then finally, let's look on how the revenue from exchange transaction must be measured. We can look on the measurement of revenue from exchange transactions. So the revenue from exchange transaction should be recorded in the books of account and also in the financial statement of the public sector entity at the fair value of the consideration which is to be received. So therefore, you can say revenue must be measured at fair value of consideration receivable. So as a result of a public sector entity providing some services to the members of the public, or basically selling some goods, so how much consideration is to be received, or how much consideration is to be receivable. So therefore, that is the amount at which that particular revenue from the exchange transaction must be recognized in the books of account and also the financial statement of the public sector entity. So therefore, these are basically some of the provisions of this particular standard here, that is IPSAS number 9. Now, before we wind up, we have I have some practice questions I want to give you here for your revision purpose. So those question leads in context of IPSAS 9, which governs recognition of revenue from exchange transactions, describe the following. Number one, the scope of IPSAS 9. Roman 2, recognition of revenue from exchange transaction. So basically, you're required to highlight the criteria which must be met for revenue from exchange transaction to be recognized. And Roman 3, measurement of revenue from exchange transaction. The revenue from exchange transaction must be recorded in the books of account and also in the financial statement of public sector entity at which value. So that, or those are some of the questions you need to attempt, basically, which will help you in terms of comprehending this particular standard here, which is IPSAS 9. So we stop at that particular point. See you in the next session as we look on the other international public accounting standard.